For millennia, gold has been the ultimate form of money, a universal symbol of wealth, prosperity, and enduring value. Across ancient civilizations and modern societies alike, gold has been treasured not just for its beauty, but for its unique ability to preserve purchasing power over generations. In times of uncertainty, gold stands as a safe haven in crisis, offering reassurance when markets are volatile and confidence in other assets is shaken. Unlike paper currencies, which can be printed at will and are subject to inflation, gold is finite and holds intrinsic value across borders and political systems. Its scarcity and universal acceptance make it a truly global asset. Central banks worldwide hold gold as a backstop, a guarantee of financial stability and credibility. These reserves act as a shield, protecting nations from economic shocks and currency devaluations. When trust in major currencies like the US dollar falters, nations turn to gold, an asset with no counterparty risk. Gold's independence from any single government or institution makes it uniquely reliable. Physical gold can't be easily frozen or devalued by another government, making it essential for countries seeking economic independence. It offers a tangible form of security, immune to digital threats or political interference. The gold standard once anchored the global financial system, creating stability and predictability. Under this system, currencies were directly linked to gold, ensuring discipline and trust in international trade. Though that era has passed, gold's reputation as a stabilizer remains strong among financial leaders. Many still view it as the ultimate insurance policy against systemic risk and monetary upheaval. As global debt rises and doubts about fiat currencies grow, gold's appeal as a store of value is surging. Investors and governments alike are seeking refuge in gold, driving demand to new heights. Nations are diversifying reserves, reducing reliance on the US dollar, and seeking greater control over their economic destinies. This shift signals a profound change in the balance of global financial power. Gold is re-emerging as a dynamic force in the architecture of a new global financial order, connecting economies and shaping the future of international trade. The world may soon look very different, with gold at the heart of its monetary system, restoring trust, stability, and a sense of permanence in an ever-changing financial landscape. In recent years, China has emerged as the world's most aggressive and strategic gold buyer, making headlines for its relentless accumulation of the precious metal. Since 2022, the country has rapidly increased its gold reserves, outpacing all other nations and signaling a major shift in global finance. The freezing of Russia's foreign currency reserves by Western powers exposed the vulnerability of holding US dollar assets, prompting a worldwide reassessment of reserve strategies. In response, central banks, especially those in the global south, began reducing their exposure to US treasuries and increasing their gold holdings as a safer alternative. China has taken the lead in this movement, with a clear goal to de-dollarize its reserves and reduce reliance on the US financial system. By doing so, it aims to shield its vast economy from external shocks, sanctions, and unpredictable geopolitical pressures. Officially, China reports holding about 2,300 metric tons of gold, a figure that has steadily grown over the past decade. However, many analysts believe the real number is much higher, possibly between 3,500 and 5,000 tons, due to unreported purchases and discrete accumulation. Much of this gold is likely held by state-controlled banks and other entities, outside the central bank's official disclosures, making the true scale difficult to track. This quiet, methodical accumulation allows China to build its reserves without spooking global markets or revealing its long-term ambitions too soon. The ultimate objective is to provide credible gold backing for the yuan, strengthening its position as a global currency. This move directly challenges the dollar's dominance in international trade and finance, signaling a new era of monetary competition. By steadily increasing its gold reserves, China is laying the groundwork for a new global financial system, one where gold plays a central stabilizing role. This is more than just risk management, it's a calculated strategic play for greater global influence and a reshaping of the world's economic order. China's Gold Corridor is a digital and physical network connecting gold vaults across BRICS nations. At its core is the Shanghai Gold Exchange, which tracks every gold bar's serial number, purity, owner, and location. This system offers unprecedented transparency and trust, allowing countries to deposit gold and receive digital certificates. Nations can hold yuan, knowing they can redeem it for audited gold at any time. Decentralized custody reduces the risk of asset freezes and bypasses Western financial centers. The Gold Corridor is a modern Silk Road for gold, positioning the Shanghai Gold Exchange as the world's premier physical gold hub. This infrastructure is the backbone of a new financial order, where gold underpins international transactions. A technical shift in banking regulations, Basel III, has supercharged China's gold strategy. Gold, once a Tier 3 asset, is now classified as Tier 1 if held in a bank's own vaults. This means banks can count 100% of gold's value as core reserves, making it as attractive as cash or central bank deposits. The change incentivizes banks worldwide to increase physical gold holdings. Gold is now a core component of a bank's capital base, not just a crisis hedge. This regulatory upgrade legitimizes gold as a mainstream financial instrument. For China and its allies, Basel III provides the global framework to support their gold accumulation. As more banks treat gold as pristine collateral, demand for bullion will surge. The global banking system is now primed for a world where gold plays a central role. The next step is for gold to be recognized as a high-quality liquid asset, or HQLA. Currently, U.S. Treasuries dominate this space, serving as the backbone of the global repo market. If gold achieves HQLA status, it could be used as direct collateral for loans and international trade, just like Treasuries. Nations could deposit gold in the Shanghai Gold Exchange and use it to secure funding, bypassing the dollar system. This would break the dollar's monopoly over global finance and empower countries to leverage their own gold reserves. Gold as HQLA would transform it from a passive store of value into an active financial asset. The Gold Corridor would become the foundation of a new, gold-backed repo and lending market. This shift could redefine the global balance of financial power. With infrastructure and regulations in place, BRICS nations are ready to launch a gold-collateralized lending model. Imagine an African country using its gold reserves as collateral for loans from the BRICS New Development Bank. No dollars, no Western conditions. The Shanghai Gold Exchange verifies and registers the gold, issuing digital certificates as pristine collateral. Loans are issued in yuan, bypassing the Western financial system entirely. This model lets nations monetize their natural wealth directly and access financing without political strings. The relationship is transparent and based on physical collateral, not leverage. To address gold's price volatility, a moving average, like a 200-day average, would set collateral value, ensuring stability. This technical fix makes gold a practical foundation for long-term development finance. The BRICS model offers a new path for countries seeking sovereignty over their economic futures. It's a game changer for global development finance. This gold-backed lending model challenges the dominance of the IMF and World Bank. For decades, these institutions have imposed strict conditions and kept nations in dollar-denominated debt cycles. China's strategy offers an alternative development finance outside the West's orbit, using gold and yuan. Countries can now fund infrastructure by leveraging their own gold, free from Western policy demands. This shift is about more than money. It's about rebalancing global power and giving developing nations real agency. The BRICS bloc is creating a multipolar world where partnerships are based on mutual interests, not dependency. As more nations adopt this model, traditional lenders may lose influence. The transition could reshape global finance and accelerate the rise of a new monetary system. The U.S. isn't standing still as the global financial order shifts. As new powers rise and the rules of the game evolve, America is taking decisive steps to protect its economic foundation. It still holds the world's largest official gold reserve, over 8,100 metric tons, locked away in some of the most secure vaults on the planet. This immense stockpile is a symbol of enduring financial strength and trust. Recent moves show a renewed focus on securing this gold, including repatriating American-owned gold from overseas vaults. The U.S. is making sure its gold is not just accounted for, but physically present on home soil. This is a defensive strategy for a world where physical possession matters more than digital promises. In times of uncertainty, having gold within reach is a powerful safeguard. By consolidating reserves at home, the U.S. ensures direct control over its financial backstop. This move reduces exposure to foreign risks and strengthens national security. The emerging system values tangible, verifiable assets, gold in a vault, not just digital entries. Audits and transparency are becoming more important than ever. The U.S. response acknowledges that, in a contested world, physical gold is the ultimate arbiter of trust. It's a foundation that can't be erased or hacked. While China builds its gold-backed system, the U.S. is preparing for a world of competing monetary blocks. The race for financial dominance is heating up, with gold at the center. America is also innovating with stablecoins, tokenized assets, and even Bitcoin as digital hard collateral. These new tools are designed to complement, not replace, the security of gold. The U.S. strategy is clear: secure its gold legacy while exploring a future built on technology and trustless systems. This blend of old and new is reshaping the financial landscape. This two-pronged approach positions the U.S. as a formidable competitor to the asset-backed system rising in the East. America is determined to remain at the forefront of global finance. The next era of global finance will be defined by both gold and digital innovation, as nations compete to build the most resilient and trusted monetary systems. The world is nearing a turning point in monetary history. The era of a single, dollar-dominated system is giving way to a multipolar world with competing models of trust and value. China and the BRICS are building a system anchored in physical gold, appealing to nations seeking sovereignty and asset-backed finance. The West, led by the U.S., is betting on technology, stablecoins, tokenized assets, and digital collateral. These two visions will shape international relations and economics for decades. Rising demand for gold could drive its price sharply higher, reinforcing the gold-backed system's strength. The future of global finance will be a contest between these two systems, each vying for influence in a rapidly changing world. The story of money is about to be rewritten, on new terms, and with new players at the table.